Welcome to this Killik Explains Finance video. This week, a topical one. This is something that's been rumbling in the background for most of the year. It's 2018. Carillion's collapse threw it into the spotlight yet again. Should the Big Four be broken up? Well, obvious question is, who are the Big Four? Well, in this instance, I'm actually referring to the world's largest audit and accountancy firms. More about them in a moment. Now, if you haven't heard of them, it's because they're private partnerships. So unless you work in the city or in global markets, you may think, who are these people? But some of the names have been finding their way into the press a lot recently. So the Big Four are KPMG, EY, they love little short abbreviations, these firms, PwC, PricewaterhouseCoopers, and Deloitte. So that is the Big Four, audit and accountancy firms. As I say, they're all private partnerships. So you won't find them quoted at the London Stock Exchange or anything like that. They are run privately. Now, what do they do? And why is it contentious? Well, the stuff on the left isn't especially contentious, you might say. So auditing, that's a fairly important role. All right? It's a legal requirement in most global jurisdictions. So this is when companies, BPs, Teslas, whoever it might be, prepare financial accounts, the auditors go in and basically make a judgment on whether those statements, those accounts are true and fair, unbiased and so on, and also comply with relevant rules, Companies Act in the UK, SEC rules and so on. All right, now it's regular, cash generative, relatively low margin, statutory work, by which I mean the law requires that companies have this work done on them. And I say relatively low margin by the standards of the Big Four. Now, how do they make up their real money? Well, that's on consultancy. So what these firms are accused of doing is basically feathering their nests by taking on audit work and then bolstering it with consultancy, sometimes at the same client. So this is further services offered to existing audit clients and, in fairness, to non-audit clients. Examples, so what sort of stuff are these guys up to? Tax, consultancy and advice, IT, business strategy and M&A, takeovers and mergers, that kind of stuff, and pensions and legal. So the whole bag, really. And some of these firms have built up huge consultancy practices, lots of experts in those areas. And this is much more lucrative. And just to give you one example, in the report that was issued around the collapse of BHS, PwC were accused of making 8 times the amount of money on the right as they made on the left. So you can see the temptation. And critics say, well, hang on a minute, can we really say that this is being done properly anymore if it's simply a route to get that? So that is the nature of the conflict in a way, because auditing is all about holding management to account, wrapping them over the knuckles, stopping them from presenting shareholders with a view of the company which is not realistic. Whereas realistically, consultancy is the opposite. All right, you're not wrapping management over the knuckles, quite the reverse. You are trying to keep them happy to win this lucrative consultancy work. And management teams at big companies, the BPs, this world and so on, know it's lucrative work. All right, and the bottom line is consultancy is more interesting and better paid. So the suspicion is that firms are just going, well, we've got to do this. Okay, so we're going to pay lip service to that, if you like. What we really want is that, and part of the reason is that. And that's going to help us recruit better talent, better graduates, bigger experts, and it's better paid, so we'll make more money. Now, highly qualified auditors would not know a conflict if it kicked them in the impairment, says Matthew Vincent in the FT as a kind of summary of the problem. Carillion collapse is just one of a string of high-profile disasters that critics say exposes this whole issue. So here's a good example. So the Big Four basically carved up lots of work between them. So they're all involved. And I won't say too much about the Carillion collapse because I cover it in another video, which I'll mention in a moment. But basically, KPMG had the external audit. That's the bit I was just talking about, signing off the accounts as true and fair. Deloitte had the internal audit, that's advising management on internal practices and procedures, if you like. Ernst & Young, EY, had hoovered up lots of lucrative turnaround advice, and PwC, PricewaterhouseCoopers, to give it the full name, bagged themselves some corporate, government and pensions advice contracts. So all of them, so the critics, had their fingers in the Carillion pie. Now, the conclusion reached by the parliamentary report into the collapse of Carillion was quite brutal. It said this is a cosy club, basically incapable of providing the degree of independent challenge needed. All right, and there's a video on the Carillion collapse that I've done as part of my bank. Now the question then is, well, is that right, and what do we do about it? So, critics want to do some quite radical stuff. So critics have said a mixture of let's ban simultaneous audit and consultancy at any single client. So in other words, if there's a Carillion, no one firm can take on both sides of that work. Others say let's split the big four, four's not enough, into 8, for example. So literally divide them, audit, consultancy, audit, consultancy, audit, consultancy, audit, consultancy. Well, there's 8 firms, so that's more competition. And more radical still, some people say auditing cannot be done in the private sector. It needs to be done publicly. We need like a massive sort of UK audit office, and that will look after all the auditing of companies that are in the public eye. So, quite radical stuff. The big four, naturally, are scrambling to defend themselves. So, and there's some mileage in what they say. So the big four are saying, well, hang on a minute, how's that going to work? Especially that last one. Size and reach are vital in a globalised multinational economy. How do you expect a minnow auditing and consultancy firm to deal with a massive Goliath like an Amazon, a Tencent and so on? How's that going to even work? You've got to be big to credibly offer auditing and consultancy services. And also, you can't just be a UK audit office if you're dealing with multinational clients. How's that going to work? Secondly, the profit motive. Cynics would say this is just a way to squeeze more money out of clients. But actually, the big four would say, well, actually, the profit motive gives staff a real incentive to work hard, improves the quality of work done. In other words, people work better to a profit motive. Now, that's contentious, not just in this sector as a conclusion, but it's an argument that's used. And thirdly, remuneration structures and Chinese walls reduce scope for conflicts. Now, Chinese walls is just these big firms saying, well, there's no problem, because the audit partners, the guys who look after the audit, if you like, they're in one bit of the company and they're kept separate from the consultants. So, the two don't talk to each other. That's a Chinese wall. We keep them separate. And remuneration structures are designed to make sure that audit partners are not just paid to sell consultancy services for the same firm and so on. So in conclusion, where does the truth lie? So obviously you've got the big four on one side, all their critics on the other. Auditing isn't easy, and it's often done well. Naturally enough, the media tend to focus on stuff that goes wrong more than stuff that goes right. And what I mean by auditing isn't easy is, not on violins start playing with the big four here, but short-term stock market pressure on CEOs puts pressure on the people who are monitoring them, if you like. There's a lot of subjectivity within reporting now, estimates, judgments that have to be weighed up and assessed by the auditors. The information asymmetry problem is a big one. In other words, these people are being asked to sign off on accounts that have been prepared by people who know their companies inside out and are there every day, and the auditors simply aren't. Non-execs are accused of bowing to pressure from executives when perhaps they should listen to the big four a bit more often, and their shareholder apathy. A lot of people say, well, this is just a scapegoat. Why aren't shareholders more actively holding CEOs to account rather than just sort of saying, well, it must be the auditor's fault again? Okay, and although breakups make good media headlines, yes, that's a solution, make big things into small ones, and there we go, more competition. It's not as simple as that. I mean, yes, the case looks to be undeniable here. I mean, 97% of FTSE 350, not even 100, 350 companies in the UK audited by the Big Four, 99% of the S&P 500. So surely we have to break them up. There needs to be more than 4. But the problem is market concentration is rife elsewhere. I mean, look at banking, look at technology, look at energy. It's not just in this part of the market we've got a problem, if there is a problem. So are we going to see an immediate breakup? I doubt it, but I'm not the expert. I'm not in charge of the process. More likely, I think, is some of these short-term proposals will be tried. It's not to say that breakups won't happen further down the line, but possibilities being mulled include a market share cap, limiting the amount of work the Big Four can take on when it comes to big companies, for example, quicker audit rotations, so moving more quickly between EY, Deloitte, PwC and so on, giving audit committees bigger teeth and expecting them to use them, benchmarking them on that, proper ring fencing of consultancies. There is zero incentive, if you like, for an audit partner to sell a consultancy contract and vice versa, and an overhaul of overall audit incentives. Now, the Big Four will clearly hope that'll do the job. Time will tell. Any questions? editor@killik.com. And if you want to know more about the role of these Big Four firms or any other major participants in the financial markets, try killik.com/learn and then head for the How the City Works tab.